welcome to Mindcrime Liberty Show with me, Swithin Dobson, and him, Tim Patton. Today we discuss Austrian economics and third worldism. Tim.
Today we're going to discuss, as you stated, two things which I think are related, and I want to see if you, Swithin, think they are related. Namely, the Austrian theory of economics, which is the business cycle, and more particularly the state monopoly Fiat banks, which are the central aspects of the Austrian critique of the sort of society writ large in economics, and the dissident Marxist doctrine of third worldism. Two of the more unpopular ideas out there. This will probably annoy both. Will annoy a number of people, but this will probably annoy both the Joe Jorgensen style libertarians as well as some of the Bernie Sanders types. But one of the first points which the hardcore third worldist Marxists make, which I think is perfectly correct if Marxism is true, of course, if Marxism is true, and this also explains in a backdoor way the immigration pressures, is the idea that the first world, and for that matter, if you go back to the older parlance, the second world countries, which were much better off, like Soviet Union, North Korea, Cuba, they're much better than, like, say, some third world countries, have a labor aristocracy within them. Workers, even at the worst jobs in the US or UK, or almost the worst jobs, earn more money than everybody else. Now, this can be explained by a variety of factors. Even if they're doing the same thing at the same skill level, I think the classical economics, the neoclassicals, say there's a cost of living, and you have to sort of bribe the workers to do something. So like to cut hair. So you can't outsource hair. Sort of explains the outsourcing. Explains some of it in my mind. There's also plenty of wrinkles in this GDP. Maybe less is more. Maybe you can't factor in like the air, various other factors that are opaque out there. But in general, you'd say, well, these workers do roughly the same thing and make more money. This annoys first world developed lefties because it more or less says that they aren't part of the club of victims. There are victims, but a kind of less victim-y. Yes, I use victim-y. Now I'll bring up Hans Hoppe's theory of banking. You could call this the Rothbard-Mises theory of banking, but since I know it the best, I will call it the Hoppe theory. And the primary criticism that there's a boom bust, and this is manufactured by state banks. I mean, we've sort of discussed this in Ismoldbug, right, about banking episode. And this, Hans Hoppe has another lecture entitled The Politics of Central Banking as well, given at the Australian Mises Institute. And, historically, state banks were at least tied to gold in theory. Now, again, the various wars, they would go off them. But this basically went away sometime in 1913, 1970 period. And now we're in a pure fiat system. And the theory roughly states if free banks and free currencies existed, state banks would have very little market share. Because why would they? They have less return, and the state has the right to print, or other words, counterfeit money. So, like, why would you put scarce resources into a good that the state can just keep growing? If I could print money and do that, I would do that, and I could pay for hotels, restaurants, valuable goods. As Hans Hoppe would state, in a way, they've recreated the alchemy theory. They created something worthless, and they're made it valuable. Now, to get this, the only real way to do it is through the state, and the state monopoly banking and state monopoly currencies. So again, Hans Hoppe has another good lecture called What Marx Gets Right. And the Austrian class analysis here is that, and this is what differentiates the Austrians from some Milton Friedman public choice type libertarian economics, is that the state is not just some normal firm. It's a sort of criminal organization. It's a ruling class, to use the Marxists. As Hans Hoppe states, the Marxists famous for saying all of history is a class conflict. But in this regard, the Austrians would agree. They just sort of disagree over who's the exploiting class. Hans Hoppe would state there's a number of errors in as well. He also have a lecture of the errors of Marx. The primary error being that he doesn't really have a theory of non-slavery. The Austrians and Marxists both agree that serfdom and chattel slavery as slavery. But Marx sort of engages in a trick. He makes that the original appropriation was wrong, therefore it's all wrong. Now, even if it's true, you can have a clean. He doesn't even think a clean capitalism is true. He doesn't even. Technical Marxists would argue clean capitalism is itself exploitative. Now, the most exploitative factor for the Austrians, as described above, is central banks. And again, central banks aren't free insofar as you don't, unless you have to assume that people are really irrational and that actually want to give money to the state. But then again, you wouldn't have to use the coercion. If you get rid of the coercion part of the taxes plus the fiat banking system, then it's just a sort of charity. But the most exploitative part identified by the Austrians is arguably not the military. And this is what's interesting about the banks. This is their main soft institution. Now, it's only soft superficially. There's a lot of hardness behind it. But with this ability to print, you could basically, the state is basically a sort of soft slave master. You can basically walk out to you take money, you buy labor products that are scarce, and you get the labor products for nothing. This is alchemy. Now, the way this works, and this is best described by what I pronounce it wrong, but the Cantillon effects. As the money goes out from the center, it keeps going out and out. It gets less and less valuable. So the state can't be a super counterfeiter or a super printer, because then everyone will lose face. But there's a certain level where the state can just sort of defraud. Again, as Bob Murphy, debate with an MMTer, would say, you're making a moral critique there, and Bob Murphy is. If the money goes out of the circles, you get less and less of it. So this is where I'm going to try to tie two things together. Even for all the criticisms that are thrown at central banks, and this is one of the interesting parts, who gets it first? Well, the domestic corporations of a society will get it first. So England will bail out its own corporations with fiat money. U.S. will bail out Boeing. U.S. will bail out all its own corporations first. Then it'll be their own taxpayers, the most politically connected, and then so on and so on and so on. Who's going to get the money last? Well, the people on the periphery. So I think this is an interesting sort of dual point here. Again, this comes from the inspiration was Hoppe's "What Marx Gets Right" lecture. What do you make of this, Swithin? Again, most Americans got some checks, most Britons got some form of unemployment, but by de facto of the sort of historical wealth and position of the society, it gives the U.S. and Britain, well, Britain less extent. It's more of a second order. And we're going to discuss sort of internal issues like euro in a little bit. What do you make of this theory? Is it true? Is it one of the ways that exploitation happens in theory? Is it through central banks? And what are sort of the foreign politics of this sort of privilege? De Gaulle famously showed up with the Navy threatened to send a navy and sort of wanted France to have its own currency, viewed as a sort of element of sovereignty. What do you make of this, Swithin?
It is certainly the case that fiat money printing from central banks is exploitative. The Cantillon or the Cantillon Effect, it was French, are certainly true. I mean, if you have, as you mentioned, you have a basement and you print yourself $1 million, you can go and buy things you otherwise couldn't have bought. Remember, at this time, the stock of goods and services is constant, which then means that so that's where you bought yourself a Ferrari. The Ferrari dealer's made one more sale than he otherwise would do, so his income goes up, and then let's suppose he goes to a 2 Michelin star restaurant. They do better. He got the higher incomes, but remember, of course, still you've got a constant supply of goods and services. So if you're getting more of it, it will eventually mean that other people are going to get less of it. So the money's going to go around and your nominal incomes are going to go up. But at the same time, because you're spending more because there's more money in circulation, it's going to be bidding up the prices of goods and services relative to at least what it otherwise would have been. Until we get to the middleman, whose nominal income goes up by the same amount as his as the prices he pays, so he's no better or no worse off. But thereafter, prices are going to go up by more than the nominal income goes up, and so in real terms, the purchasing power of the later receivers is going to be lower. So it's just a whole redistribution exercise. And as you're exactly right, who gets the money first? Well, the government is one of the major ones, and the corporations. Because why is it the case that loads of corporations and insurance companies, etc., will lend the government money? Well, to a large extent, because they know that if anything goes wrong with needing to pay them back, they're trying to default. They probably know they probably won't do, because the Bank of England will lend the money instead. Also, with quantitative easing, would they know that they've always got a really big buyer in the secondary market for any of the government's bonds that are issued? So so a big insurance company could buy government bonds, and then we're not doing great. Bank of England goes, we'll buy the bonds from you, and it's basically just a welfare check. But as opposed to $1,200, it's more in the millions or possibly billions. So yeah, the corporations, obviously the banks benefit, because it keeps the banking system, gives them quote unquote liquidity. Otherwise, it prints enough money to make it viable to do their crazy banking stuff that they do, which of course makes them better off. The government is made better off because they can spend more than they otherwise would be able to. I mean, historically, interestingly, Louis XIV in the 17th, early 18th century found it very annoying that the Dutch, because they had a central bank, and now this is actually pre kind of Fiat, but like proper sort of national quote unquote central bank, they could raise finance way easier than he could, because he had to go to actual financiers and sort of like borrow money, and if they didn't pay him back, if he hadn't paid them back previously, they'd be like, well, we're going to charge you massive rates of interest. They didn't have the same power that, say, the Dutch or later on with the Bank of England. So, yeah, it certainly makes it a lot cheaper. And interesting, I mentioned the Bank of England, because it goes into your point on war, is the Bank of England was created in 1693, I remember the day, 93 or 94, basically so it made it easier for Britain to fund the 9 Years' War against France. And the central banking is something that's there to fund war. I mean, why did Nixon go off gold in 71 when you had sort of the gold? It wasn't the gold exchange standard. It was the Bretton Woods Agreement with the sort of quasi gold standard. So just for anybody who doesn't know, foreign central banks could redeem US dollars at the Federal Reserve for gold, because this is the quasi gold standard that existed after Bretton Woods in 40 something or other. I think it started convened before the end of the Second World War. I think it was in 44. I could have got the date wrong there. So Nixon goes off. So why does he go off it? Well, because he can't redeem all the dollars. Why can't he redeem the dollars for gold? Well, because he printed so many dollars. Why did he print so many dollars? Well, for two reasons. One, the war on poverty with LBJ, and the war in Vietnam, which was astonishingly expensive. War is by far the most expensive thing that states can engage in. And so if you've got a ready supply of money to get cheap financing on it, then this is what you're going to be able to do. So not only does it facilitate domestic exploitation, it facilitates foreign exploitation. So I think what you described in your opening monologue is entirely accurate.
I'm going to move to the first question here. How does this benefit states to have their own currencies or own means of exchange? So the historical second world, which I think used to be like the Soviet sphere, which is China, Russia. Well, China is sort of separate, but China and Russia today and historically seem to know this. The hardcore Marxists seem to know this. Lenin seemed to think that you had to sort of get. Actually, Lenin and Stalin, from my understanding, wanted sort of gold to redeem. They didn't want paper pieces. And China today is hoarding gold as well, from my understanding. Not that I'm criticizing them. But China and Russia seem to know this, that trading in dollars is sort of a kind of racket in a way. The trouble is, and neither of them has gone full WTO from my understanding. Full WTO. They have certain rules built in. Of course, the U.S. has certain rules built in as well too. You can sort of read sort of like Austrian critiques of like NATO or Austrian critiques of WTO as well. I mean, they're opposite of free trade in a way. Now, again, certain paleocon protectionists can make good points defending them. I want to give credit to them because certain libertarians sort of just trash the paleocons for no good reason here. But and as I pointed out, de Gaulle seemed to think having your own currency was sort of a element of sovereignty. Now, again, the two of us here are sort of, anarchists, conservative anarchists, Austrian anarchists, or some of that. So we want to get rid of states and have so forth. But it seems like one element of being a functioning society is having some control over your money. Now, again, there's degrees of exploitation here, but France, this was de Gaulle's desire. He wanted two things. He wanted his own currency, he wanted nuclear weapons, and having his own currency. Now, again, they eventually went to the euro, but they should still have somewhat control over it as well. Seems to allow you to do things that other societies can't do. Now, this gets into the weeds of the wealth of the nations and how you get that position here. France, U.S., somewhat Russia, they were developed societies anyway. So there's other factors at play here. It's not the only factor, but I think it is a factor in which, for one thing, it allows you to even the exploitation happens, it stays within your society. So France could bail out its own corporations instead of, using some other means of exchange. Now, again, it might be that gold's the best system to keep everyone honest, or Bitcoin. But it seems like in this world of dishonest central banks, at least your own society, the benefits are staying inside. Although alternatively, you might not want your benefits to stay in your own society. You want your benefits to accrue to some other society. But it still seems to lie that there's some sort of international politics. Some sort of Hans Hoppe's lecture again at the Australian Mises seminar. I think it's fairly interesting here, the sort of, the international politics. So the second world, again, as I stated, seem to want to have control of the currency. Or were they right to? Now, again, we're sort of Austrians. What do you make of this point, Swithin?
I do think countries or states in particular will want control of their own currency for a number of reasons. One good example of this, actually, is you could argue that it could promote stability within your country. The interesting example here is Iceland in 2008. The Icelandic central bank did not have the power to bail out the Icelandic corporations. The reason was most of their debts were in foreign currency. They were in yen and other currencies, which meant that there was no way that they could get them to pay their debts off, because if you just increased the supply of the Icelandic krona massively, that would have just depreciated it on the foreign exchange markets. And so they'd be no better off, because they just literally need even more Icelandic krona to buy the same amount of yen to be able to pay off their debts. So having sort of debts and things denominated in your own currency allows you a lot more flexibility than you otherwise would be able to have. Also, in this regard as well, especially if the states subscribe, which they typically do, some sort of Keynesianism, was the Greeks wanted to leave the euro so they could go back onto the drachma, basically because this would allow them to print loads more drachma than the European Central Bank would produce euros, so that they could I was going to say stimulate exports. Greece doesn't really stimulate many exports, but what it would have been able to do is massive ramp up tourism, which Greece do a lot of, because it'd be significantly cheaper for foreigners to go and take holidays in Greece, because the drachma would be basically worthless. And so I could convert like £1 into loads of drachma, and it would end up being cheaper than going to Turkey. Because when I went to Greece 11 years ago, it was actually a relatively expensive country to visit, much more expensive than I thought it would be when I went. Because I thought, well, it's just some sort of relatively bit of backwater Eastern European country on the Mediterranean. Can't be that expensive. And it was. So if you control your currency, if you control a currency within your borders, everybody is using that, you have a lot more control over what happens in your country, and especially as well with debts and things as well. If you have a particular currency you have the control of the supply over, and you have a financing issue, it doesn't matter. Your central bank will just print it for you. Whereas if you're dependent on like US dollars or other things like that, they're not going to step in and sort of provide you some liquidity, quote unquote, so that you can help. So like So for example, Zimbabwe basically uses US dollars now. Because as you may or may not remember, the massive hyperinflation in Zimbabwe, which led to the $100 trillion dollar note, which they genuinely did produce in Zimbabwe. So having your own currency, which people accept, means that it's going to be easier for the state to maintain its control and be solvent, which is why I think they want to maintain control of their currency.
Yeah, the politics of decentralization are interesting insofar as certain things that might on a larger scale, one group might think on a larger scale this is bad, but on a local scale, it could promote stability or so forth. Your example about Iceland being one of the classic examples here. As far as your Greek example, when I went to Greece, it was actually fairly, there's like two things you could infer from this. When I went to Greece, it was fairly inexpensive with regard to like the United States. With regard to like the United States or Western Europe, Greece was, I think it was something like, you get a decent hotel for 40 euros or 35 euros. Very nice hotel for that, which is not that bad compared to U.S. Prices here. That was about 4 years ago. But in that kind of the sort of classical Marxist view is that more or less labor should be worth the same, and that there's a price differences here on the returns to labor with regard to labor. Again, it could be explained by two existing things. It could be explained by the existing society's wealth, or it could be explained by exploitation here. That's sort of, from my understanding, what it would be. Now, this is again, it's a very common point that the sort of Austrians and Marxists, at least for the really good Austrians like Hoppe, point out that there is an affinity between the two analyses here. Now, what explains this difference here? Why are prices different in different societies, and to what extent is it with regard to the currency there, the currency generated? When I was in Egypt, for example, you could get things for very cheap there. Again, what's interesting is if there were international corporations and they weren't being sort of like racist against foreigners, if you got charged Egyptian prices, you would pay hardly anything. It'd be like you get a whole dinner for like $5 US. But they would just if they didn't, if you had a local guide to get you the cheaper prices and cut him a deal, you get better prices. What explains the differences in prices? Is this a form of exploitation, or is this just capital? Swithin?
Differentials in prices is not necessarily straightforward, because what you would always expect, if you had strictly homogeneous products, you would expect that their prices would be equalized if you had like sort of world general equilibrium. Obviously, you would have to take into account transportation costs as well, but ultimately you would expect those to be the same, because otherwise, well, if you were selling in the low price area, you take your goods and services and sell them in the high price area, which would then increase the supply in the high price area, and decrease the price, and then decrease the supply in the low price area, increasing the price until they're equalized. So why is it the case that it's so much cheaper to buy in other countries is an interesting question. I suspect it is for the West, as it were, is the world standing, particularly the US dollar has. I think the Cantillon effects are effectively international. And I think that the pound has it as well, because it's sort of like the financial center of the world to a large extent. And so sort of piggybacks off the Americans, even though it's a different currency, sort of part of the same sort of world system. basically we can print money, and so in the case in the UK, we can buy loads of imports without actually making anything. Because you got this money, it's like, oh, we don't make it. Oh, we'll buy it from foreigners instead. And I think this is the same thing that takes place when you're sort of going out there, is that your money is worth more than it basically should be. Because remember, this is like the international Cantillon effect. It's just taking time for it to dissipate throughout these areas. And so I think you could plausibly make a case that the West is richer in sort of buying goods from the third world because of sort of the position that the currency holds. So I mean, take the US dollar. I mean, the US dollar is basically the international reserve currency, which was cemented really after the Bretton Woods Agreement. The US dollar is depending on to what extent you take this the theory seriously. One of the reasons I heard as to why the Iraq War really took place wasn't primarily over oil, but that Saddam Hussein was attempting to trade oil in euros rather than dollars, because so they invaded for that reason primarily. And that was also one of the arguments as to why, interestingly, everybody went after Gaddafi, despite being a relatively benign figure internationally. Obviously, internally, you could argue he's repressive, which is perfectly reasonable. But yeah, from memory, he didn't really go out and he did fund some terrorism activities. That's to be fair. But everybody went after him because, well, one of the theories is he wanted to create a Pan-African gold dinar. So there's at least theories. Now, to what extent they're borne out by facts is an empirical question. But it does seem to be the case that the Americans are very concerned about keeping the dollar in its international premier position, because it basically keeps up the value of the dollar relative to what it otherwise would be. Because if everyone stops trading oil and other commodities in dollars, then the demand for the dollar goes down, and therefore prices denominated in dollars goes up. So I do think that, as it were, relative to quote unquote natural order, the US dollar is significantly overvalued. But I suppose what you could say in defense of the current system is, well, the currencies of all these other countries are a lot worse than the US dollar. So for example, I was talking to a guy in Syria, and he was saying, like, nobody wants to use the Syrian pound. It's just loses its value all the time. They all want to trade in dollars. So you could argue in a way that the dollar is providing a sort of superior.
It's the cleanest, dirtiest shirt.
Yeah, you could make that case, but I still think it is the case that you do get the international Cantillon effect. So I think it's kind of both, really. Although this is interesting as an aside, where El Salvador becomes interesting because they now have Bitcoin as legal tender, and the El Salvadorian government will buy your Bitcoin from your current US dollar prices.
Also Zimbabwe.
Zimbabwe uses US dollars, that's true. But to my knowledge, they haven't got the same similar system as El Salvador's with Bitcoin. Because again, El Salvador they were just a tin pot nation, and I suspect they attempted to have their currency at one point, but then no one used it because it was rubbish. But I think this is interesting, though, with currencies, and you want to use them over bigger areas. It's just sort of the natural progression of money to basically be a single world currency with caveats, because it makes trading easier. So as it were, having sort of like the dollar in per se, or a currency which transcends sort of national or sort of political boundaries, isn't necessarily something you wouldn't want. But as I say, the El Salvador government Bitcoin experiment could be interesting, because that could then mean that the sort of developing world stop using the US dollar in the same way. Although, of course, this is going to be largely dependent on infrastructure as well, because it could be electronic and things. As an aside with that, I was talking to my brother, and he said he was talking to a missionary, I think, in Haiti, and it was Haiti. And when everybody goes to church in Haiti, they always plug their phones in, because the church is like one of the few buildings that has electricity. Bitcoin isn't going to do very well in Haiti until it gets more electricity. So that'll put a dampener on it to some extent. Dollar, the international Cantillon effects are a thing. I think that's must be it's going to be at least part of the explanation.
I would also argue there's regional Cantillon effects within Britain, within the United States, within society as well. You get central sort of peripheral areas get it low, get the money later than central areas, and so forth. So I think it happens on multiple levels here.
Oh, just to interrupt, I think that's definitely true. London is just an absolute black hole. It was the center of the financial stuff, and it's going to be the area that's going to get all the new money first. And it isn't particularly surprising then that that's like the richest area in the country, and basically everywhere else seems to basically poor in comparison because it just sucks everything up. And I think that's there's lots of it is subsidized more of infrastructure spending in London than in other places as well. But certainly I think the financial, especially because of the city of London being such a big part of the UK economy, I think as well related to that, I had a look around. I think Britain is probably one of the most centralized countries in the world when it comes to sort of like GDP generation. I think like London produces, of any country I could come across, produce way more GDP than like any other, even more of a comparable population. I mean, Germany is much more sort of dispersed in that respect. But continue. But
I will move on to the euro, because the euro to me is one of the interesting currencies here. And there's always, as you brought up the word conspiracy theory, but there's always things are always operating on different levels here. On the one hand, it's a regional currency. On the one hand, it's a national currency for Germany and France to sort of try to control Europe. But then to keep the U.S. away. So the euro to me remains interesting. What is the euro's relationship in this scheme of we'll say Cantillon effects? The European Central Bank seems to have more power than, let's say, the Zimbabwe Bank. But then Europeans, as I stated before, France, Germany, they are developed very intelligent, productive societies. We're not dealing with societies of losers here. So I'm not saying that here. Again, there's always other factors at play here. But it seems like they've managed to keep. Now, it might be bad for the Eastern countries, Poland, Greece, and so forth. But to what extent Cantillon effects occur in Europe here, and to what extent does this centralize power, and to what extent is it to keep the Americans or the Chinese out here? What do you make of that, Swithin?
Well, with respect to Cantillon effects, in a way, I think it actually. Well, it did. It actually, oddly, in this case, benefited the poorer countries in the EU. This is the point made up very clearly by Philip Baggus in Tragedy of the Euro. He was also the author on The Big Freeze, which is a book on the Icelandic crash. The reason why the Mediterranean countries wanted to join the euro was that. Well, for a couple of reasons. One, it meant that the euro was going to be stronger than their domestic currencies were because they would have had like crazy inflation rates. I mean, the Italian lira, before they went onto the euro, the lowest denomination of coin they produced was 100. The exchange rate of the pound to the peseta in Spain was like 200 pesetas to a pound. Italy was like a couple of thousand lira to the pound. I mean, these are countries that clearly had huge levels of inflation. And they also had very bad sort of records financially, historically. So corporations and other people wouldn't really lend to them very much. So they found it relatively difficult to find people who would lend them money. And obviously they could print it, but of course that caused a lot more inflation. So they found it more difficult to do that. So when they joined the euro, they got the cachet of the Germans. And the implicit thing was, oh, well, if stuff goes wrong, the Germans will back everything up. And so what it meant was that Portugal, Spain, Italy, Greece, etc., their governments were now able to borrow at much lower interest rates than they otherwise would have been able to. And so they could splurge on government spending. I mean, in Greece, before the crash, I'm pretty sure that everybody was entitled to a Greek citizen was entitled to a holiday paid for by the Greek government. They would pay you to go.
Paid for by German taxpayers and workers.
Yes, basically, yes. Yeah. And related to that as well, Greece in particular, I think, they undervalued the drachma. No, sorry, they overvalued the drachma. So when they converted into to euros, they basically got more euros than they should have done. So actually the Greeks were made better off. And the Germans, on the other hand, the German political class wanted to undervalue the Deutschmark. this was at the behest primarily of the German exporters, because Germany, comparatively, was sane. It was basically the sanest guy in the asylum, post Second World War when it came to central banking, and so the Deutschmark was relatively strong. We should always annoy the exporters because it meant that the prices of their exports were relatively higher, because it meant that foreigners needed to spend more foreign currency to buy the same amount of,
including the Americans, the Americans.
Yeah. And so they undervalued the Deutschmark when they went onto the euro deliberately to aid the German exporter. Again, it's impoverished the German taxpayer. So in this case, oddly, the Germans have now, I suppose you could argue it's a form of class warfare. It's if you're connected to the German exporters, whether you probably now have a higher income than you otherwise would have, and so you could say, if you look at this, it's like the middle class in Germany that's created the value, and this has then been expropriated and then sent down to the Mediterranean, and also has sort of implicitly subsidized the exporting industries. But so the euro is interesting when it comes to that. But with the euro is primarily a political process. Interestingly, according to Philip Baggers, argues that the French were some of the biggest behind it. He argues that the French basically blackmailed the Germans into accepting it, because otherwise they would have kicked up a fuss about German reunification. The reason being is the French always hated the fact that the Deutschmark was strong. And so basically by making them join the euro, this would make it cheaper effectively for France to buy German goods, and also make them look less bad internationally when the franc lost value. Again, the franc was like 10 francs to a pound. And even historically, I mean, basically at one point just took a couple of zeros off, because again, they had massive France's inflation in France, that is. So the euro is kind of complicated. But again, the same Cantillon effects would occur, because again, when they print the euro and whatever, it's going to go to the banking sector and major corporations and the governments first. But you did get this interesting regional one, which actually ended up to a large extent subsidizing at least the governments and the beneficiaries in the poorer countries. So in a way, that kind of went in a slightly different way than you would normally expect.
Yeah, at the one PFS Society, there was a Q&A said there's a problem. There's rail lines in Italy and Spain paid for by German taxpayers. Of course, there's always multiple levels these effects happen here. I'm moving to my final question here, which is what ought to be done in a way, or what ought not to be done here. Again, we're both some sort of right-wing conservative anarchist of some variety, Austrians of some variety here. So. Brian Kaplan has an interesting thought experiment once, and this was in sort of obscure debate here with, I forget who it was here, but he has sort of two islands, Island A and Island B. Island A has perfect Misesi and Rothbard gold bank, no fractional reserves, and Society B has MMT, let's just say full MMT bank. And if the two societies trade with one another, what would the effects happen of Society A, the grade A society, and Society B, the grade B society? Because this sort of brings up, I in the back of my mind, I'm always somewhat sympathetic to conservative critique free trade on the grounds that it could, if Society B is undermining its industry. This was one of the Trump's critiques. That they'll do this or that. Now again, he'll also say they'll steal intellectual property, of course, which again, Kinsella, that's not. That's not a claim, but there's also other complaints. Tom Woods had a debate here, not Tom Woods himself, but two people on the Tom Woods show had a debate over, protectionist tariffs and so forth. If Society B is undermining, is giving huge aid, Boeing and Airbus do this all the time. Trump went to the Saudis because Boeing was accusing Airbus of basically getting a subsidy. But then again, Boeing gets subsidies too. Trump more or less got Boeing to buy the Saudis to buy up some 737s or something recently. Well, this was like in 2019 or so. So there's always sort of interesting effects of if you're free trade in a society, if you're a free trading society. Now again, arguably Iceland and Germany are in a way the closest to, so to speak, the natural standard, or the exploitation free standard. what would be the politics? Of course, the third world has its own problems in a way, but in a way, delineating their currency in U.S. dollars seems to they'd be at the very bottom end of the Cantillon effects. And this, again, as I say, this is the Marxists have certain true pieces of their analysis idea. I don't think they can identify a utopia or an exchange-free society here, but there are interesting sort of wrinkles here. So what ought to be done if let's say you're in the very well protected city-state that's sort of Rothbard land, and then what ought to be done? Again, they could come and invade you. So there's in one talk that Nassim Taleb had once, someone brought up the aircraft theory of money, which I always thought he called the battleship theory of money. He says that he controls the battleships and controls the money supply. In a way, that's true. But so long as you don't get invaded by the society that has the M&T bank, what should that society do? Should they start printing money? Now, of course, many of their producers would then just say, let's go straight to gold or something like that because they're rational. You don't have to go full rational. Maybe it's out of patriotism or loyalty. But what ought to be done here? Swithin?
Well, if you have the MMT bank, MMT land and Rothbard land, I mean, I think the obvious thing would be that effectively the Rothbard land would be on 100% gold standard with full reserves, and MMT land would be crazy fiat currency. Now, they would just need to have a way of distinguishing which was sort of Rothbardian currency and which was MMT currency. In that case, one would expect that the MMT land would just, their currency would end up collapsing in value on the international currency markets. Now, the question arises, well, why doesn't it happen with the US dollar? Well, obviously, MMT line could try and keep it up with the power of the military. But it's an interesting aside with that. I had a discussion with a guy once who claimed that actually that the value of the dollar was cemented because of the US military. And I was arguing, well, the central banking kept the US military going. And I think there's probably bits of both at certain points that sort of allowed it to get the power of it that it has today. But I imagine Rothbard land, if it was to go full gold, it should be fine. Now, does that mean there can't be any Cantillon effects? No, probably not. But the extent to which you yourself have got a pretty solid currency, I mean, you should have less of these issues. So I suppose my point.
Let me use an aside with it. Let's say Rothbard land has a motorcycle dealership, and let's say Japan has big motorcycle dealership as well. Suzuki, will say, and they've been known to do two things: print money and give subsidies to them. Should Rothbard land make motorcycles in that regard? What if they say, "Oh, this is unfair. We have to compete against them." You could just say, "Well, then they shouldn't. Then it's just not economically feasible to do so." Which in a way is a fair answer. But then certain goods just aren't able to be produced. Which again, that might be the fairest answer. That's the most rational answer. In a perfect world, there'd be no, it'd just be whatever the carrying costs are. So what would you say to that?
Well, I would say that, okay, Suzuki are subsidized by the Japanese government, fine. We must protect Rothbard land. But then the question is, well, what if they subsidize them so much that Suzuki could give the bikes away free in Rothbard land? But it seems to make economic sense to go, we'll not take the Suzukis. That would seem to be bizarre. You go, no, free stuff is bad. Go away. Now, obviously, you can make an argument, we might become dependent on them, and then, but if you take sufficient steps to go, yeah, okay, we know this might not last forever. So, so if you treat it like I'm being given money by the government, I shouldn't just assume the money is always going to remain there and put like a contingency fund in for when it stops, I can continue as normal as I can. That would be the analogous approach I would make, because effectively what's happening is if the Japanese government is subsidizing Suzukis, what that really means is almost like a forced gift from Japanese taxpayers. It's a gift. Take it. Now, does that mean that there's no disturbance, or there's not going to be a situation where the Japanese government can cease to subsidize the Suzukis and then they go rocketing in price and there's no bikes being produced in Rothbard land? Yeah, sure. That's of course possible. But I would say you've got to then take this on an economic level, but also on a more metapolitical level. Is what's your ultimate goal? What's your destination? If you want to have Rothbard land, you're going to end up not having Rothbard land. The extent to which you start trying to regulate inflows and outflows of goods and taxes to try, quote unquote, level the playing field. You should take the position, we do what we do in Rothbard land. What you do in Japan is different. Okay, we're not going to invade you, and we're just going to deal with it in the same way you deal with the fact that we do things our way. And I think that's really a sort of a general political approach to sort of decentralization is the only real way you could go about it. Because even if you could make a short-run economic argument that, oh, well, no, if we did all these little bits of intervention, assuming you knew how to do them properly, which I would doubt, you're then setting in other incentives in play for growth of bureaucracies, et cetera, and then Rothbard land ceases to be Rothbard land.
We'll move on from Rothbard. I had another question. That's a very specialization. That's a very good answer. We'll move on from Rothbard land. And let's say we'll have Fidel Castro land, or El Salvador land. This will sort of tie the 2 points together. For my final question here, what should they do? In a way, there's certain imperial expeditions which might be outright imperial. They're not really done. There's sort of the rhetoric, and then there's the reality here. Some of them are closer to the rhetoric than some of them are closer to the reality here. What should if you're in the third world, so to speak, what should you do? Should you go to gold? Should you go to Bitcoin? Would that be, instead of denominating your currencies in U.S. dollars due to Cantillon effects here? What should they do? Now, again, you could always say, well, having centralized powers is bad to begin with, and I agree. But in a way, this is what must be done to get to a slightly marginally better environment. I mean, again, I don't view myself as I think the term is sociopath. I don't resent other countries or other societies from becoming poor necessarily. Maybe France resents Germany to being richer than them. Again, this happens on multiple levels here. But if it's for legitimate reasons, then in a way you should try to protect yourself against that. And same way Rothbard land should specialize there. What do you make of what should Che Guevara land at? Of course, there's a lot of problems with all other areas here, but I do think on this aspect it is somewhat interesting.
Well, I would say you're going to look at what is possible in practically feasible in your area, but I would definitely look at some form of hard currency, possibly silver as well as gold. Bitcoin is a possibility. That might be the easiest in certain circumstances, although the problem with trying to roll out Bitcoin is the electricity issue. The third world don't have it. I mean, I was watching a documentary, a food program. It was in Morocco, and the presenter goes to the butcher, and all the chickens are still alive, and he has to point to the one he wants to eat, and he goes out back, chops head off, plucks it, and gives it to him warm, because they don't have fridges. I mean, so the problem with Bitcoin in the third world is the electricity issue. Now, El Salvador, I think, went for the Bitcoin thing because El Salvador didn't even have their own currency. They just use US dollars. They may have had historically, I'm not sure on that, but they currently do not have a national currency in the same way Zimbabwe don't. So what you're looking at there is things similar to like the Mises plan or the Rothbard plan to re-monetize the currency. Now, this might be a good idea for them to do it in concert, to have like a greater demand for this sort of gold currency between sort of in a regional area rather than a national one potentially. But if I was Cuba, for instance, I'd definitely be looking at gold, silver as a backing. I mean, it even doesn't even need to be 100%.
Let's say if you're a sugar grower in Cuba. Let's say if you're like a sugar co-op in Cuba.
Well, you just got to use what's best to hand. I mean, you don't really have much choice. You just use what's there. But if you're the Cuban government or whatever, you find something you could do. You partially back it. You may have like fractional reserves to some extent, maybe, but at least there's that commodity component behind it, which is going to give your currency some value because it's got some alternative uses. And I think this would be a way of stabilizing and insulating themselves to some extent against Cantillon effects if they just continue to US dollar. Then the question arises, why haven't they done it? Well, they might not have very much access to any precious metals. That's possible. Or they might think, well, it's not worth it. Or maybe they just got bad economics. Or it's the case that they've got a real plan to just bring in a national fiat currency because that gives the state the most power. So as to why they don't do it, I don't know. Maybe it's not technically feasible. But that would be certainly my advice. If they have more electricity, possibly Bitcoin may be a better option in the short term. But if you've got a situation whereby you still got a lot of cash transactions and etc. and it's all in hand and whatever, then some form of hard currency conversion is certainly what I would suggest.
My final point here, and this isn't my final point, is the effects domestically. One of the negative effects for the first world, especially the United States, is probably the growth of your point about which gives it the power, the military or the pre-existing economic position. It's probably both, but it makes the arms companies in the United States and Britain, which again, Sean Gabb and certain English people can complain that their standing has declined somewhat, which it clearly has, but they still should have a fairly large deal in the arms trade, especially per capita, considering their size. So does the French. And part of that's due to just competence and intelligence, but it makes certain industries which one doesn't like or not like as much, not to say they're per se illegitimate, bigger. I mean, companies like Lockheed and Boeing are huge divisions of, and again, it all filters down to MIT. They always joke, for one of the good one-liners to go after Chomsky says he works at MIT. All sorts of institutions seem to be propped up by, this is the counterfactual claim. If things were different, what would be, maybe instead of investing in aircraft carriers, you could invest in, I don't know, nicer homes or nicer consumer goods or things like that. Interesting enough, I mean, this is one of the critiques that you could make of the Soviet Union, for example, is instead of investing in consumer goods, they invested in submarines and, expensive projects to expensive invasions in Afghanistan again. So those are sort of the counterfactual effects here. So it does, if it is exploitation, and we can sort of go into a rabbit hole about what is and isn't, and in some way that's entirely semantics at some level. I generally think it's sort of, you know it when you see it. It does sort of have domestic effects. Different industries might be preferable. So then, what do you make of that? And that's my final comment. I enjoyed this discussion. Thank you very much for doing it.
Yeah, I mean, you are right. I mean, the length of government subsidy and whose benefits and whatever goes very, very, very far down with the arms contractors and MIT, et cetera. So it is all very difficult to work out. But the key point is Cantillon effects exist, and they exist internationally. Basically, when it comes to current standards of living, the West is higher than it probably otherwise would be. Now, of course, with another currency, we may be richer for other reasons, but everything else being equal, yes, it is a way of taking purchasing power away from the third world. If you'd enjoyed this, just now to thank everyone for listening. If you have enjoyed this, please share it with your friends and family, or any of you think who have enjoyed this. The higher we get, the more subscribers we get, the higher we get in the search rankings, and the more people can access this material. And if you'd like to contact the show for any reason, please contact us at mindcrime@libertyshow@gmail.com. That's mindcrime@libertyshow@gmail.com.